Well, hello and welcome everyone. My name is Rich Harvey, CEO of Property Buyer, and thank you for joining our webinar today about the Sydney property market, where to find the best pockets of value. And joining me today, I have the renowned Terry Ryder, the head of hotspotting.com.au. Welcome, Terry.
Hello, Rich. Always good to be here with you talking about our favourite subject, which is residential property.
Absolutely. So Terry, just before we get started, could you just give us, the viewers, just a quick little bit of background, just a quick 20, 30-second background on yourself and what your company does?
The Hotspotting website business started in 2006, and its objective was to help real estate investors identify the best places around Australia to buy. And that's still our core business, although increasingly we've expanded into other areas, providing services to real estate businesses, particularly providing reports on areas of interest to them. And that's basically what we're about, the best places to buy, because that's the question we get probably 90% of the time. The question is, where's the best place to buy? Or what do you think of this location? A particular location that a potential buyer might have in their minds, and they want to know what we think about it. So that's the demand that we're servicing with what we do. Fantastic.
Well, we've been an avid subscriber and advocate of your services, Terry, for many years. So I really appreciate you taking the time today to share it with us. So I'm going to share my screen with everybody. So we'll just pop it up on the screen here. Terry, you can see the screen. All good there?
I can.
Fantastic. Yep. All right. Well, let's get started. So as I mentioned, I'm the CEO and founder of propertybuyer.com.au. We're an exclusive buyer's agent. We never sell. We just help our clients to get a take on the market, create a strategy, and help them to buy in the best possible location and the best possible property. Just by way of background, just in terms of my company, I've been going for 20 years this year. We've been won a whole lot of gongs along the way, a couple of awards. I've also been the president of REBA, the Buyers Agent Association of Australia, the chairman of the Buyers Agent chapter for the Real Estate Institute, and helped to improve ethics and standards in the industry. And I'm an active member of the Property Professionals Association of Australia and a qualified property investment advisor. So that's a little bit about my background. Today we're going to do a couple of things. We're going to give you a quick snapshot on the property market. We'll just talk about where Sydney sits in the national scheme, where we think the market might be going for the next, say, 6 to 12 months coming out of COVID and getting through the rest of COVID. Then we're going to get into the real detail, Terry, about where are the good spots to buy, particularly based on your latest report on the top 5 hotspots. We're also going to cover some trends, and then lastly look at some testimonials and examples of how buyers should be actually approaching this market. So we've got a really jam-packed hour to get through, Terry, so we won't delay and get stuck into it. So firstly, market update. Let's have a look at where dwelling values are sitting year to date. And what's interesting, Terry, is that property prices are still in positive territory. What's your thoughts on this, Terry?
Well, I think there's a huge disconnect between the messages people are getting from media and the actual reality in markets. We've been told constantly, because we're researching media every day right around the country, and we're finding the message are the prices are falling across Australia. They simply aren't. In most cases, in most places in Australia, prices are holding steady or rising a little. And the graphic on the screen illustrates that this is the position of prices on average in the capital cities relative to 12 months ago, and there's only one of them that's actually down. The others are still up. In the more short term, more recently, some markets in some of our cities have come back, but in actual fact, most places not. An example is Canberra. According to the CoreLogic figures, we've been in this pandemic for 6 months. Canberra's recorded growth in its house prices in each one of those 6 months. Adelaide's done something very similar. And so the overall position across the country generally is very strong, surprisingly strong relative to what media has been telling us and what the economists have been forecasting.
Exactly. So we'll get into that more in a moment. So if we look at the last 28 days, what they call the rolling average of home values, basically since March, since when the COVID impact really hit, you can see how obviously we hit probably The bottom of COVID impact was probably around July, and we've started to climb out of it. Obviously, Melbourne is putting a drag back on confidence again, but Victorians, we really feel for you and we'll get through. But it's interesting to see how we've got a bit of a J curve going on there with the index. So their basic core logic is saying that the rate of decline is slowing and decelerating, which is positive news for the market. And then we go to, sorry, Jared?
It's worth pointing out that's the average for the capital cities, and media does tend to talk in generalisations. The average is dragged down by particularly the Melbourne situation. If you took Sydney and Melbourne out of those figures, it would be above the line. It would actually be in the positive. And if you also included the major regional centres of Australia, would it be even more so?
Exactly. Good point. If we look also, it's also important to remember that consumer sentiment really tracks very closely with the volume of sales, actual number of sales that are taking place. And sales volumes have been weak, particularly in the last 12 months. But obviously during COVID, it's been people holding off selling, thinking they won't get the value that they should get for their properties. So sales volumes has fallen. And consumer confidence has been up and been rising and falling. It's been a lot more volatile, particularly in the last 3 to 4 months going there. Now let's have a look also at auction clearance rates. If you see here, the big dip obviously is the impact of COVID. This is just for the Sydney market. You can see that obviously the last 6 months of last year was very strong. We were nudging high 70s, even 80% clearance rates. Beginning of the year, it started strong, then it dropped off a bit of a cliff for about 2 months, and then it's resurfaced, I should say, between about 60 to 70% the last couple of weeks. And actually the clearance rates in this next slide from last weekend, we had an average of 69% clearance rate. So pretty healthy market, Terry, across all the major markets in Sydney, and some pretty strong results. I missed out on an auction on the weekend on the Northern Beaches for a client. There were 3 bidders there. The Channel 7 new crew didn't really help me by being right next to me, but there was a guy in the corner that really wanted this property in Fairlight. So missed out, but yeah, that's the way it is sometimes. As we go through from auction clearance rates, let's have a look at actual dwelling values over the last quarter. And you can see that dwelling values fell for the month only 0.5%, but for the quarter, they were down 2.1% for the past 3 months. But as we indicated in that first slide, still up 9.8% year to date. So even though the market's declined year to date, we're still up from the record high, which was July 2017, just over 3 years ago. Now, Terry, I'll come to some of your slides in a minute, but let's have a look at the long-term view. So people are saying, Rich, how should we look at the market? Well, I often like to look at a long-term view. So let's go back to the 1960s and let's look at all of the big growth phases that we've had in the property market, right across the board. And all the times you can see the little circles there. There's around 7, I'm missing one here in the last second. There's only 7 major times we've had major declines. But again, if we take a long-term view of the market, Terry, you can see that the market's done pretty well, can't we?
Yeah, it has. I think it's done remarkably well. I think the last 6 months is probably the best possible advertisement for residential property as an asset class that you could possibly imagine, because it is shown such incredible resilience in the face of unimaginable forces. And we haven't seen a collapse in prices that some economists had predicted. Many economists, in fact, predicted back in about March and April. And it's just even Melbourne, which has been going through that second wave, which has had a huge impact on individuals and on the economy of Melbourne. Prices are still maintaining an extraordinary level of resilience. Sales are still happening somehow, despite the lockdown. But other parts of the country where things are relatively normal, and that's most of Australia, markets are pumping. I'm having conversations across the country with all kinds of real estate professionals every day, be they buyers agents or valuers, selling agents, builder developers, and consumers. And 90% of the conversations are very positive because there's activity happening at quite a surprisingly high level in most markets around Australia.
I think the word that I would use is resilience. And I think it's a bit of an overused word, but that's the one that we're seeing going forward. Just a quick little plug here for a book that I was a co-author in. about a year ago. If you'd like to get a copy of my book, The Secrets of Property Millionaires Exposed, just shoot an email to my assistant, Michelle, at info@propertybuyer. Now, normally we retail these for $30, but we're today happy to give it away for half price. So if you'd like a copy of that, just shoot an email saying with that discount code PROP2019, and we can, including postage, get that out to you as soon as you like. Let's have a look, Terry, at some of the trends. So what are the key trends that we're seeing coming out in 2020 and through this COVID period? Just give us a little rundown on your view of the market there.
Yeah, there are a couple of really notable trends. First-time buyers are really the most active cohort. Investors are relatively quiet at the moment, but home buyers are definitely dominating, first-time buyers in particular. For the average first-time buyer, if you've got secure employment, it's a great time to be a buyer. Interest has never been so low, and the level of government assistance to first-time buyers has never been so high. So that's an important trend. And I think investors would be wise to follow first-time buyers, because where they're buying, their activity is going to push prices up. The exodus to affordable lifestyle, I think, is the biggest single trend in real estate at the moment. It was underway before the pandemic, but the lockdown phase has opened people's eyes to the possibilities of working from home, both the employees and the employers, who suddenly realised, well, if we've got a significant number of our team working efficiently and effectively from home, our office costs can be lowered. And so that's become a big trend. And it doesn't mean that everyone's leaving the big cities. Partly that's it, but it also means people are choosing to live in different parts of a major city. And Sydney's a great case in point. We'll talk about some examples as we go through the presentation. Low vacancies is a massive trend across Australia. In most parts of Australia, vacancies are not only low, but very low. That includes parts of Sydney, even though the average for Sydney is above 3%, in individual pockets, and we'll talk about some of those today, vacancies are much lower. And that's putting pressure on rents. And when rents are rising, prices tend to follow. And the final trend is the impact of infrastructure spending. That's always an impact on residential property, but it's going to be the big one going forward, because it's very clear that state and federal governments are going to try to recover our economy by spending big on infrastructure and bringing forward shovel-ready projects, tens of billions of dollars worth around the country. It's going to be a big one.
Excellent. Yeah, I think that one about escape to affordable lifestyle, it's really what I call acceleration of the dream. And we're seeing evidence of that and helping clients to really get that dream in the lifestyle areas, because they can work from home now. So Terry, we've seen prices rising almost everywhere, pretty much just to recap of that first slide. But I guess the key point I'd like you to sort of just quickly touch on is the corollary is the regional areas are also seeing a reasonable increase as well, right?
Yeah, and particularly recently, I think regional areas have been performing very strongly, and it's been helped by the fact that in most regional areas the virus is just not a reality. It's a big steady thing for most people in regional Australia. But yeah, we've been seeing good growth in most regional areas in the last 12 months, and in every capital city except Perth. And Perth is actually starting to get some momentum too. But it's really significant that Sydney is still well up on the price levels of last year, despite 6 months of pandemic. Melbourne's still 6% up. Canberra's doing well. Hobart's doing well. And regional Tasmania has been a leader as well. So yeah, plenty of growth markets around the country. And it's important for people to grasp that, because the messages from media are very different and they're just plain wrong. Yeah.
All right. And as you mentioned, Terry, we've seen vacancy rates in the capital cities being actually pretty reasonable, pretty tight. They obviously, when COVID first hit and a lot of the Airbnb properties went back into the long-term rental pool, that shot the vacancy rates up. But it's interesting to see how much they've been absorbed in the various capital cities. And we're starting to see that, I believe, trending down in a more normalised market.
They are trending down, Rich. And in fact, we wrote that slide a couple of days ago, and as of today, there's new figures out, and pretty much in every one of those cities except Melbourne, they've actually fallen further. In 7 of the 8 capital cities, the vacancy rate. So we now have a situation where most capital cities are below 1.5%.
Yeah.
Sydney's around 3.4%, I think now. But as I said, some pockets of Sydney are much lower than that, 1 or 1.5 or 2%. So it's a huge factor in the market. it's a trend that investors should be saying, hey, that's significant. We should be actually taking action, because when vacancies are very low, rents are rising. When rents are rising strongly, prices will follow. And that's going to be a driving force in the market going forward from this.
Yep. Excellent. And the other big one is infrastructure spend. We always talk about this, Terry, has been a major impetus for both the economy and for property markets, right?
Absolutely. I know we've said in some of our previous communications, Rich, that if you want a simple strategy as a property investor, follow the infrastructure trail, buy property that lies in the path of progress. And by that we mean infrastructure spending is hugely influential.
Yeah, well, let's get into some of the detail of that in some of these next few slides, Terry. So we're going to, our viewers, we're going to target 5 main areas around Sydney, starting with the Sutherland Shire. We'll do a quick sort of whip around the Sydney market and identify what we believe is some of the key hot pockets that we think are going to have some really good growth potential, and some of the reasons why. So firstly, just starting with the Sutherland Shire, also known as God's Country, some beautiful waterways down there near Port Hacking, Cronulla Beach there, you can see the aerial shot overlooking, and further south down to Bundeena, where you've got the Royal National Park. But look, again, Terry, take us through these vacancy rates for some of these key areas. Why do you think they're so low?
Look, I think it's partly because of that movement to what I call the exodus to affordable lifestyle. This is a great example in the Sydney metro area of that. It was actually you that first alerted me to the potential of this area. It's one that I hadn't sort of been fully aware of. And when we started to look at it in depth, we realised how right you were about it, because in Sydney terms, it's very affordable. It's got a wonderful, a combination of rivers and beaches and national parks. The lifestyle factor is huge. So it really does tick that box of exodus to affordable lifestyle. And those vacancy rates sort of reflect its popularity. Sydney's average is 3.5%, but all of the postcodes of Sutherland Shire are much, much lower. And some of them are way below 1%. That means that very, very tight, not much available for rent. And if you're a landlord who owns property there, you're going to be getting a pretty good rental return. And of all, as we note at the bottom of the slide, all of those postcodes, their vacancy rates have fallen in the past 3 months. And through the pandemic period.
Yeah, and also let's look at some of the median prices too. I think you've just touched on the word affordability. So if we look at some of the median prices in these key areas in the Shire, for example, Engadine 950, that's an area where I believe it is obviously further a fair way down the train line, but again, just under the $1 million mark to get an area that's really family friendly, got some great parks and great attributes. So, if you were looking at the equivalent type suburbs on the northern beaches, you'd be paying sort of around 1.6 to about 1.85 as an equivalent. So I think the thing I like about the Shire is its proximity to the Royal National Park, the proximity to the airport, proximity to the beaches and the waterways. And I guess also, again, a bit like the Northern Beaches, it's got a relaxed, family-friendly atmosphere. It's not dominated by any one kind of demographic. It's got an aspiring demographic. It's not a low demographic. And you got places like Janali, where there's a lot of new development coming in, because that's been touted as a bit of a hot spot for new developers moving in to try and get some higher density in there. And also places like Wirrawee and Sutherland, but just over that $1 million mark.
Lots of good schools in the area too, Rich. There's the number of private schools, and that's always a factor for buyers. They've got very, very good attraction in that regard. A couple of other things I noticed, the unemployment rate in this municipality is well below state and national averages. Another indicator of the strength of this market.
Exactly. So a lot of those factors, I think, Lee, when you've got aspiring home buyers and also some good places ripe for renovation, you're going to see some good price growth, and that'll be sort of pulled up to sort of par with the rest of Sydney as we go forward. So I think the Shire gets a really big tick, and it's really one of our number one areas we think that ticks the right box for affordability and lifestyle going forward. If you look at also unit prices again, compared to other parts of Sydney, really attractive area and also quite an affordable price point. Obviously, Cronulla, you can see there, it's a bit higher at 810,000. That's, again, right on the beachfront. But again, places close to the train line. You're only about 40 minutes train journey to the CBD. and good public transport access there as well. All right. That's probably enough on the Shire, unless you had any other points to make on the Shire, Terry, from your notes.
Very good long-term growth rates, Rich. That's something that investors might look at. What's the track record? Many of the suburbs in the Shire have long-term capital growth rates of 7 or 8% per year, which is right up with the best in the country, really.
Yeah, well, that's great. 7 or 8% is a fantastic long-term average, and I think coming off a lower base, I think it's got some really good upside for future growth going forward, long term. Okay, let's take a quick trip out west, out to the Badgerys Creek area, and obviously one of the biggest infrastructure projects of the decade for many years is the construction of Badgerys Creek, due to be finished in 2026. So I have dual runways, a lot of spin-off there to the local areas. So Terry, take us through why you think this Badgerys Creek area is so good, and the vacancy rates and the growth rates proposed for that area.
We referred at the beginning to some of the major influences and trends, and infrastructure spending was one we particularly identified, and we think it's going to be even bigger going forward because politicians are going to seek to recover our economies by a big infrastructure spend, bringing forward shovel-ready projects. This is one of the biggest anywhere in the country. It's not the only one that's impacting on Western Sydney, which is now one of the nation's largest growth economies. The thing about an airport isn't so much the airport. Well, the airport itself is significant, but what springs up around it is what's so important. It becomes in a massive jobs node. We see that already in all of our major cities, that there's a big commercial industrial precinct of businesses that like to be close to major airports. And that's the biggest, most significant thing about it. They're calling it the Aerotropolis in terms of the Badgerys Creek, the Western Sydney Airport. And that's going to be a massive job. So tens of thousands of jobs are going to be created, not just in the airport itself, but in the business that want to be close to it. And people, the research shows, want to live close to where they work. So suburbs that are within maybe 30 or 40 minutes of this massive piece of infrastructure are going to see uplift in buyer demand, particularly as it becomes closer to reality. It's not far away, it's really underway in terms of construction.
Terry, I'll just make one point about the Aerotropolis and the jobs factor. I mean, the types of jobs that will be located in this Aerotropolis, they're not going to be menial jobs, right? What kind of jobs do we think are going to be created in this Aerotropolis market?
Well, look, it's many and varied, but one of the things that's going to be part of it is the Sydney Science Park, which is a $5 billion enterprise that's being created in conjunction with the airport project. There's also going to be the Penrith Health and Education Precinct. So it's not just sort of warehousing and workshop type businesses and jobs. It's actually a huge variety of technology type industries are going to be there, and many of the people working there will be very well paid individuals. So it's going to be something that's going to give real uplift and momentum to property markets.
I think it's going to be a really sort of a high paying area for high quality jobs. So anyone in the science field or aeronautical field obviously need to be university trained and educated. So the kinds of incomes that those people will be earning will be reflected in the style of housing that people will want in that local area. So that also bodes well for that areas, again, as Terry said, within 30 to 40 minutes of some of these key areas. Let's just have a look now, Terry, at some of the key suburbs that we've been looking at or talking about in this area. So there's quite a mix of areas here. Now, some of the standouts, the Luddenham area is probably, it says here, statistically not relevant because you've got a lot of large 1, 2 and 5 acre blocks that are still being sold in that Luddenham area. There's still a lot of subdivisions to still occur. Places like Busby or Holsworthy, Liverpool, I think, is certainly a strong market going forward. Where else would you recommend some of the investors would look at in this area, Terry?
I do like Liverpool. It's a wonderful. It's like a CBD in its own right, with wonderful facilities, hospitals, education facilities, shopping, etc. So the suburbs, sort of, I'd say, between Liverpool and the new airport would be ones to target out around Blacktown as well. But one of the things people might note from the detail on the screen, the long-term growth rate, 7 and 8% in many cases. And, one of the myths and misconceptions that are out there in media is that you've got to be close to the CBD to get the best growth rates. Well, I think, the research just blows that out of the water again and again. We're a long way out west in Sydney with many of these locations, but they've had very, very good long-term growth rates. And I would suggest they're going to get better over time because of the impact of the Western Sydney Airport and the Aerotropolis.
I think you made a good point too, not to just focus. I mean, you can't pick winners just on a one-year average. There's a lot of factors like COVID and other economic impactors or political factors. Last year we had 2 elections that can impact a one-year growth number. So it's very important to look at the long-term growth rates of these areas going forward. Any other thoughts you've got about the Badgerys Creek area?
Affordability is probably a big factor. By Sydney terms, that this is one of the most affordable precincts, but it's also where they're expecting a big chunk of the jobs in the Sydney metropolitan area to be created in the next 10 or 20 years. And I just reiterate again, buy property that lies in the path of progress. And then we're talking about infrastructure. I think it's the single biggest reason why Sydney has performed so well in the past half dozen years is because the infrastructure spend has been so big. And this is going to continue that process, exacerbated by the recovery efforts of governments coming out of the pandemic period. And this is where the jobs are going to be created. This is where there's a higher level of affordability. And so we're going to increasingly see people as home buyers looking to establish homes in this area. And investors should follow that trend.
Excellent. No, I couldn't agree with you more on that thought process, Terry. Absolutely. Let's move to our third area now, the pristine northern beaches. Or the Insular Peninsula, as sometimes the locals like to refer to it. So again, some beautiful areas. Sometimes a little bit loved to death. If you're sort of trying to get a park in Manly on the weekend, you're better off to just leave the car at home and catch a bus sometimes or catch the ferry. But look, the markets in the northern beaches have been performing incredibly well. I've just been quite blown away at how resilient some of the prices have been through the COVID period. Just personally, as a local resident of the northern beaches, I found that the best time to buy was when there was peak panic, back in that sort of late March, early April phase. That was a really great time to buy because some of the vendors were freaking out about COVID and how much the market might have dropped and were willing to really negotiate. But now we're heading into the spring market. The vendors are still a bit nervous, but not nearly as nervous as they were. And so prices have been quite resilient and have been holding up quite well throughout this whole process. So you've got some really interesting results here, Terry, on the screen. You've got places like Allambie Heights, Beacon Hill, not far from about sort of a 10-minute drive to the beach. You've got places like French's Forest. Interesting to see the vacancy rate's a little bit high in French's Forest, but the vacancy rates are quite a mixed bag there, Terry.
They are. There's more variety there than we've seen in some of those other areas that we've just looked at. Partly these are the sorts of areas where investors might own apartments but have them in the Airbnb system, and of course that has been curtailed by the pandemic and the closure of borders and the shutdown of flights. And so a lot of those short-term rental propositions have gone into the long-term rental pool and they've pushed up vacancies in some of those postcodes, not all of them. Some of them are still quite tight. But so I think that's
Manly. I used to own a property in Manly myself, and Manly's a very seasonal market. You don't want to be leasing a property in the winter months. You definitely want to be leasing in spring or summer or beginning of the year, and you get a much higher rental. So again, some of these markets are very affected by seasonal factors, where people want to get settled for school and for the new year before they get underway for the year. All right, some of the unit prices there are pretty strong. Some of the most sought after suburbs in Australia is Freshwater. Realestate.com actually reports it's probably the #1 most sought after suburb, very tightly held. We get a lot of requests for buyers to try and get into that market. And we do get access to a lot of off markets there, but again, very tightly held, very competitive market. fantastic long-term capital growth, great village feel. Places like French's Forest is going through a change or a metamorphosis. French's Forest has a new hospital, the Northern Beaches Hospital, that's just been completed just over 12 months ago. And that's quite a magnet for doctors and nurses and medical staff and people getting treatment. And some of the areas around that hospital will be rezoned in the next 12 months. So you'll start to see a slightly higher density. And that's why that's going to be, it's also earmarked as an area for higher economic activity under the Sydney Metropolitan Plan going forward. What else can we tell you about the Northern Beaches? I've got one more slide, I think, here, Terry, going forward. This is the housing market here. Just move that across there. So median prices, obviously a lot higher than the Shire, but you've got some median prices there ranging from, French's Forest at about almost 1.6 million up to Manly at almost $3 million for our house. So again, the premium and really high demand areas, that's reflected in those median prices. And pretty good volume of sales there too, Terry. Pretty reasonable turnover in those markets.
Yeah.
One thing I'd say, there are some extra pockets of it. There are some suburbs that aren't on this list that are adjoining some of these suburbs. So if you look at places like Narrabeen or Elanora Heights, now Elanora Heights is, I think, is a little hidden pocket, or North Narrabeen. You're just up behind the lake there. It's got some beautiful properties. A little bit further to get to, but the one point I'd make about the Northern Beaches is the Northern Beaches Tunnel is proposed to be built in the next 6 to 7 years. And that will link up with the Wakehurst Parkway, the tunnel under the Spit Bridge, and connect up with the Warringah Freeway. And that will remove travel time, or reduce travel time quite significantly. And that's going to be a game changer for areas, quite a lot of suburbs, and reduce travel time from places like Dee Why, Cromer and Balgowland. So there'll be a number of suburbs around where that Northern Beaches Tunnel is going that will really improve both travel time and property prices quite significantly, Terry.
Yeah, I think one of the standout features of this market is its consistency through thick and thin. Sydney's been for a boom, then there was a correction phase, sort of 2018 into 2019. But through that, the Northern Beaches, I think, still continue to perform. And in particular, places like Freshwater that you mentioned, that is our personal pick for that area. And its consistency through, no matter what's going on in the broader market, it just seems to turn over with such enormous consistency of sales activity. And it's one reason why its long-term growth rates are so good. 8% PE for houses and 7% for apartments. Pretty good performance, and vacancies tend to be consistently low in that area too.
Yeah, I mean, people love, if people don't know the Freshwater area, it's got a really lovely village feel. It's got a really kid-family friendly beach, a really nice little surf break. It's just got a really nice, when you walk out in the surf, it's quite easy to catch the wave there. So really, really highly sought after. All right, I think that's probably enough on the Northern Beaches. Let's head out further west again. Let's head back to Blacktown, Terry, and look at, again, another area that's getting some really good pickup from infrastructure. And also there's the Blacktown Hospital, it's been upgraded. And let's have a look at some of the vacancy rates around some of these areas. Again, another mixed bag of results, but again, quite a diverse range of suburbs here. You've got places like Plumpton or Mount Druitt, which have been considered sort of a lower demographic, but actually performed quite well. See how low the vacancy rate is there in Plumpton, Terry, 0.9, and Mount Druitt, 1.2%. And I personally know quite a few investors that have done extremely well out of the Mount Druitt market. Put aside any kind of prejudice and invested there and done extremely well. Yeah,
and Mount Druitt has been targeted by the state government, announced maybe a month ago, a massive spend in the central areas of Mount Druitt, infrastructure spend to lift that area, part of their recovery from pandemic strategy. I think the significant thing in those figures on the screen is the areas where the vacancies are high are the areas where there's new estates being developed, and they do tend to have fluctuating vacancy rates because new products coming into the market are quite constant, like Riverstone, for example. Whereas the more established suburbs have got very, very low vacancy rates, like Plumpton, Quakers Hill, Mount Druitt, well below 2%. And so again, tight rental markets But popular, these areas are popular and have been for a long time because of their relative affordability. So first home buyers do target these suburbs because they're relatively affordable, and they always show up in the stats on state government grants for assistance to first home buyers as one of the leaders in New South Wales.
Excellent. And let's have a look at some of the pricing in some of these areas, Terry. So Blacktown, current median house price, 690,000. Layla Park, 650,000. Places like Quakers Hill, 780,000. So again, as you say, first home buyers are particularly appealing because of the price point, but also because, again, family friendly and not too far from the CBD and good transport connections. Actually, I've always quite liked Layla Park. It doesn't have a train in it, but it's always been one of my areas that I've been watching and seeing grow quite consistently there. And you've got an average growth rate of 7% there for Layla Park. But look at the volume of sales there in Blacktown, 430. So significant volume of turnover. But again, pretty strongly consistent average growth rate, 8% going forward. I think you'll find places like Schofields and Riverstone. Again, a lot of new land or larger land that's being subdivided in those areas going forward. I know there's a lot of land developers chasing land lots, and we've helped some of those developers acquire those lots. So you'll see an increase in supply the further out you go. So even the further out you go to places like Rouse Hill, there's still significant farmland that's yet to be carved up. So I think as you go further out, there'll probably be a lower rate of growth because there'll be a greater volume of property coming on the market in the future. So that's just something to bear in mind for future capital growth, Terry.
Yeah, again, infrastructure is a key word here. The Blacktown area's got university campus, major hospital. You had an image of that just a few slides ago, affordability. But proximity to jobs nodes, it's such an important factor in dictating where people choose to buy as home buyers. And people might say a long way from the CBD, but for people who live in these areas, the CBDs are relevant. I mean, they've got no reason to go there. They don't work there. They don't shop there. The kids don't go to school there. What do they care how far they are from the CBD? Their lives are based in these areas where their jobs are. They've got all the facilities they need there, and housing is affordable. And it's going to be enhanced again by that growth of the Western Sydney economy, in particular that new airport and everything that will spring up around it.
Exactly. All right, let's move to our fifth area, which is the Hills District. So you can see an image there, one of the very infamous Norwest Business Park, which has a very strong concentration of employment going forward. A lot of big Woolworths have their headquarters out there, and a few other major companies have their headquarters out there. Actually, an interesting fact, Terry, probably around 30 years ago, I almost got a job with the local council selling all of that land when it was completely undeveloped. So it's completely transformed in the last 30 years. But let's look at some of the housing stats for the Hills area. Baulkham Hills, current median house price 1.2. But again, look at that growth average, 8%, really good performer. Bella Vista is an interesting one. See, you note there, it's got a median price of 1.585. Now, it's an interesting phenomenon. Bella Vista is quite a sought after suburb, compared to some of its neighbours like Kellyville. And it's interesting, partly to do with the name and partly to do with the style of housing and the size of the blocks in that area. It just seems to be an area that is more highly sought after than some of the others, and that tends to push the median price up. But you can also see much lower volume of sales, so it's obviously more tightly held. And then places like Castle Hill, big volume of sales, median 1.5. Around Castle Hill, around the shopping centre, which is also being revamped, there's quite a significant area of rezoning going on, so there'll be much higher density, particularly around areas close to the new train station in Castle Hill, Terry. So any other thoughts on those stats there?
I think one of the big influences in that market, one of the reasons it's in our report, is the impact of the Sydney Metro Northwest. And I think one of the reasons that Bella Vista is popular is it's got a station on that new piece of rail infrastructure. It's not just a rail line, it's what the plan is, that with each of the stations there's going to be a cluster of retail and commercial and residential as well. That's an impactor. So for Bella Vista, that's a factor. It's also very close to the Norwest Business Park, which is still a work in progress, even though it's been there for a couple of decades now, but it continues to expand, massive jobs nodes. So those are all factors. But I guess the thing that stands out for me for Hills Shire is that its current population is a bit over 150,000, but in 15 years' time it is expected to be 250,000. So it's an area, it's a growth area, and it's been targeted by the state government as a growth centre, which means a lot of infrastructure spending is going to be invested there to support the population growth that they're projecting for that precinct.
I think anything, and it's been proven in a lot of property economics, that property prices rise when you do get that new train infrastructure, because it improves travel time. It just improves the transport options for those areas. And being a heavy rail and driverless trains, it's a wonderful piece of infrastructure. I was actually just watching a documentary the other night on how they built it, and incredible logistics. They did an amazing job in making it very safe and very reliable as well. So a really good piece of infrastructure for that local area to really open it up. All right, so let's move into, we're going to do some questions and answers also at the end, so please stay on and you can type your questions into the chat box or the Q&A, and we'll get to that as soon as we can. But the next phase of the webinar, I just want to talk about how should buyers look at the current market. What's the approach that we should be taking given this COVID environment, and what are the things that you can do to capitalise on the current environment? Well, the first thing I'd say is don't follow the herd. Terry, you write about this extensively, right? And don't live your life by media sound bites and headlines. You don't want to be a lemming or a sheep and follow the herd. So why is that, Terry? What are the headlines telling us to do?
Well, I think it's a reality that no one ever became wealthy following the herd. Yeah. The people who do succeed financially are the ones who either leave the herd or detach from the herd and head in the opposite direction, which is usually the smartest thing to do, because the herd is not necessarily acting on logic or based on research. The herd tends to follow the media, and the media is full of misinformation. So I think people need to just detach from the pack and think and act independently and do some proper research, because I think the information we're presented today is a great example of the disconnect between media messages and the reality of what's happening out there in markets. So the herd, in terms of investors, is sort of clustered around the fringes, waiting for some signal to stampede, which is what herds tend to do. So when they read there's a boom on, they'll all dive in, they'll all stampede towards a market, and of course they will have missed the best time to buy at the best prices. And I think right now is an opportunity for investors. I think it's the key word for people to take out of today is that opportunity is a key word for the circumstances that we're currently in. Opportunities to buy well in areas that have the credentials for long-term growth. I think there's absolutely no doubt that an area such as we just talked about, Blacktown, and the impact of the Western Sydney Airport, it can't help but grow over time. Yeah. So now's a good time to be positioning yourself for that growth.
Exactly. No, some great thoughts there. So I guess, this one here. So I guess just in terms of doing that and actually activating your ability to find a property, just quickly, what we do as buyer's agents, and myself as a buyer's agent, what we do is 5 key things. We help you create an investment strategy based on your individual situation. There's not a one-size-fits-all approach that we take to helping our clients. It's very much about helping each person identify what strategy is going to work for them, and then identifying the area that will deliver the right kind of property outcome. Obviously, we get access to a lot of off-market properties you'll never see advertised on the property portals like Domain and Real Estate. And we save our clients a huge amount of money just by negotiating well. And I've got some examples of that coming up later on. And one of the other factors is you get someone to work alongside you who's a local expert. They know the local market, they know what drives that local market, and can identify values really quickly to help you pay the right price, crunch the numbers, and basically give you that excellent confidence to buy well. So that's some of the key benefits you've got if you do engage our services and use a buyer's agent along the way. Just briefly too, before we go to the examples, what does it cost? We work on a fixed fee basis. The fees range between 1.5% to 2%, depending on the price point. But for an example, a property at 500K or under, the fee is simply 9,000 plus GST. You pay an engagement fee of 2,000 up front to get it started, and then the balance of the fee once we've secured the property for you. But You'll have someone working along with you, and it's money well spent, getting good advice and good education and good support in making sure you pick the right kind of property for your strategy that's going forward. And again, just a special offer today. If anyone does engage our services, we're giving a 10% discount off our engagement fee. You've just got to mention the word COVID 2020. It's not a new disease, it's just a new buzzword for a discount, Terry. So you can just shoot us an email or when Michelle sends around a copy of the slides, you can just say, yep, interested, and we can organise a time to chat with Peter from my team, who's our Director of Client Strategy, to help you with the next steps. So for the last part, Terry, of our webinar, I just want to give a couple of examples of what some recent investors and buyers have done and what sort of strategies they've adopted to do well in the Sydney market and the surrounding markets. So these are just a couple of examples of what we've done recently. This was an investor that we helped buy a property out near St Mary's. And actually the St Mary's area is going off, I've got to tell you, with the announcement of the Metro North train line and where the stations are being located. This property has already gone up in value that we bought for this client. Now, this was a little 3-bedroom home. Now, it doesn't look terribly attractive. You can see by the image there, it's got a bit of a pretty funny green kind of paint. But this is a classic case of look beyond the exterior and get to the interior. You know, it was a good sized block of land, 650 square metres, needed a small reno. You can easily add a granny flat out the back. And if you add a granny flat for about 140K, you'll get an extra $350 a week in rent. So, you know, really strong outcome. Now, we got this property at an amazing price. This was a house in Western Sydney, $525,000. And it was, again, the median price for this area is around $600,000. So we saved our client a huge packet of money. And literally a couple of weeks ago, another one sold in the street for $595. So it's just also about timing as to when you buy well. We just bought this property about 2 weeks ago for an investor in Newcastle, another market that we love targeting. And this investor was chasing yield. We were able to get a 7% yield for this particular property. It was a house converted into 3 flats, really good suburb of Newcastle called Waratah. Rents for over 45 grand a year from this home, purchase price 640. So a pretty happy investor. And wouldn't you like to have a couple of those in your self-managed super fund, Terry? It certainly provides some good income.
And Newcastle is such a great place to own real estate, one of the biggest cities in Australia, a growth economy. It's always going to be a performer long term, and to buy something that's giving you a 7% yield from the word go. So a lot of people think you've got to make a choice between yield and growth. That's you don't. Right. You buy properties like this, you can get both, and I think that's a great example of it.
Yeah. So they're not necessarily mutually exclusive, as I always say. So it's a great example. Thanks for making that point. And again, another one we bought in Western Sydney, in the local area. We got this one. The client had actually found this property and engaged us to do an appraise and negotiate. Now, we got this property for a further 30 grand below what he'd already negotiated. He thought he'd have a crack himself, but we knew the agent and we knew the market extremely well, and we're able to get a property that already had a granny flat in place, and again, saved him a good packet of money. So that was a cracking deal. Another one that I did recently, this was in Pennant Hills, bought this again during the COVID period. I saw this property on a Wednesday morning, took the clients through on the Thursday, did an appraisal the same day, managed to exchange it on the Friday. So within 2 days of it coming on the market, I was able to snap this home up. Now, luckily, these vendors were a bit nervous and wanted to sell out quickly. So we're able to get a pretty significant discount on the price. And it was the ability to just move quickly. Also had a good relationship with the agent and was able to get in before the open home on the Saturday and beat 6 other buyers that would have probably put an offer in on the day that they went to have a look at it. It did need a reno, but it was a really good buy for a great family home. This was another one I did on the Northern Beaches. Now, this property should have gone to auction, but again, because of COVID, there weren't as many buyers around. But I managed to save them 200 grand by putting in a pre-auction offer 2 days before the auction was due. So again, if you can just time the offer right and get all the ducks lined up in a row, there are deals to be had out there. Not saying you always get a bargain, but sometimes if you know how to move right, you know how to talk to the agent, you can get an exceptionally good deal like that. Another one we did in Newcastle just a couple of weeks ago. This was a fairly modern and almost new property. So there wasn't a huge discount, but still a significant discount. and our client was very, very happy. They'll get good depreciation benefits on this property. Agent was guiding 750. We got it for 710. So again, pretty decent saving for our client, more than covered our fees and all the process involved. And just to finish off, one more here we bought in Manly. This was earlier in the year. I'd love to buy or repeat this deal. I was able to buy, you can't quite see, it's probably the middle unit in this particular block. The one above it had just sold for 1.3, but I managed to get the one below it for 1.19. It didn't have really any views. It just had a district outlook. You couldn't see the water or anything. But again, 400-metre walk to the Ferry Wharf. This will be a cracking buy for long-term growth. You know, really, really great position, tightly held. So great for a long-term investment. And have I got one more? Oh yeah, one more just to finish off. We also buy properties interstate for our clients. This was one in Brisbane. Again, a good cash flow type property. Now this one had multiple options. You'd actually easily add a granny flat in the rear. It had a big shed there as well, so great for storage. A lot of tradies love the big storage shed. You might even be able to subdivide it down the track or put a bunch of townhouses on this property. But again, we're able to save the client over $40,000, but getting a strong yield. So again, Terry, getting that both growth and yield and getting multiple incomes out of the one property is another great strategy that we follow for a lot of our investors. So look, why don't we go to, and if you'd like to get in touch, yeah, just please send me an email. If you want a copy of the slides, we can arrange that. We'll send around a copy of the recording, which will have all the slides in it, so you can watch any bits you missed or wanted to ask about. If you'd like to get in touch, the numbers are all there. And also for Terry as well, if you'd like to get access to his reports, you can go to hotspotting.com.au. So Terry, I'll just stop sharing the screen and I'll go to our Q&A session there. And have we got any questions in the Q&A that we need to answer?
Both the chat panel and the Q&A, plenty of questions.
Okay.
How about I toss some of them at you? Daniel was asking about the Badgerys Creek region. Is there still a lot of land to be developed around Badgerys Creek? And I imagine that question speaks to the worry that where there's a lot of land to be developed, it can suppress price growth. Yeah,
so there is still a lot of land. Again, it hasn't all been registered or rezoned yet, so it's still in the process. The way the Sydney Metropolitan Plan works is that they look at rezoning land depending on what level of infrastructure is available. When I mean by infrastructure, I mean water, sewerage and power. So there's a lot of earthworks that are being done around the Badgerys Creek area, and there's a lot of suburbs. So the Oran Park area is pretty much price controlled. So there's one particular landowner that owns a lot of the land around there. Around Luddenham and Austral, there's a lot of market farmers, a lot of Italians that still own land, and they're gradually being sold to developers. So yeah, there is a fair bit of land, but it won't all come on the market at once. It's got to make sense to a developer, and the rate at which they'll release it will be probably slow and controlled. How is the Box Hill market? Box Hill market's taken a little bit of a hit. Again, a bit like Riverstone, it's a bit further up. So places like Box Hill still got reasonable value, but again, just got to be very careful about what you're paying. And you've got to look at recent land sales to compare what you're buying in that Box Hill market. Chi Chang was looking to buy a house in Marrickville but being priced out. Any other suburbs around the inner west or south where you would have potential? Not sure what you think about Leichhardt as it doesn't have a train. Yeah, so Chi Chang, we actually have a specialist in the inner west, Nick in my team, and we love the areas around Marrickville, Dulwich Hill. So we think some of those areas have got a lot of potential. And Leichhardt, even though you do get the plane noise, the A380s, well, there hasn't been many planes going overhead lately, Terry, because of the curfew and the migration lockdown. But no, we do think some areas around Marrickville. I'd also look at St Peters and Sydenham. They're two other areas that I think have a lot of potential to go forward for capital growth and good strong yield. That's where I'd be looking at. Question here from Zoe. Do you provide help in strategy for existing property investors to increase growth of portfolio? Absolutely. Terry, you run like a mentoring program. Yeah, you can talk about that.
Yeah, we do. We're certainly not buyers agents. We don't do that. We leave that to experts like you, Rich. But mentoring is where we help people analyse their situation, be clear about their goals and develop strategies for achieving those goals with property investment, and then get on the path of actually looking for the correct areas that fit their strategy to be looking for properties to buy. I think one of the key messages that people could take away today, the importance of building your team before you build your portfolio. It's really important to have a team, and I think your team should include a good buyer's agent, but certainly a good mortgage broker and accountant that understands real estate, and many more. It's important to have all those people in place and to be talking to them before you go out there and start looking for property. And I think some of the case studies you've just given us earlier, Rich, on the prices you got property relative to their value or potential value, the savings, relative to the fee that you might charge for that service. I'll put it the other way, it's an incredible form of false economy not to use a service like that, because you've actually got to pay a fee for it. You're actually going to be financially much better off if you do. So build your team before you build your portfolio. Have a mentor, have a good accountant, and engage a good buyer's agent, I think.
Thanks, Derek. Appreciate that. That's really good thoughts. And again, yeah, there's no one specialist that's going to give you all the answers. As Terry said, you do need a good finance broker. You do need to get good information, and you do need a quality, reliable buyer's agent to work with you, and a tax advisor. And again, if you need to referrals to those people, we're happy to share our database and contacts with you in that regard. I might just quickly go to the Q&A. Oops, I made it too big. How do I go back to you? Capil has asked, any information around Parramatta area from long-term point of view? Terry, I'll just give you my quick perspective on Parramatta, Terry, and then you can chime in. The Parramatta area, particularly, I'd be looking more to the Westmead area. The Parramatta area has been rezoned for a lot more high density. So you're going to see a lot of higher density development coming into that Parramatta area. So I'd be very cautious about buying apartments in Parramatta. I tend to be pushing out more to the medical precinct around Westmead Hospital. So Westmead Children's and Westmead Public Hospital as an area where I'd be looking to buy. What are your thoughts on Parramatta, Terry?
Very similar to yours, Rich. I'm concerned about the level of apartment development, and the vacancies have been very high there, even before the pandemic impact, and I think they're going to continue to be, because they continue to build very large towers of apartments, and that's going to tend to drag down the potential for capital growth. You mentioned Westmead as a better option. Prasad's actually asking a question there in the chat box about the Westmead market as a good place for a boarding house. Is that something you get a requirement for from time to time?
Yeah, we do. We work with a lot of developers as well, and we've helped developers buy boarding houses. So yeah, absolutely, it could be a potential area, because you do have a lot of nurses and medical staff in that area that are looking for an affordable zone. There is quite a bit of supply though. You've just got to be double checking what is in the pipeline, like what's been approved, and there are new restrictions when it comes to building boarding houses, Terry. They used to be quite lax in regards to parking, and now the level of parking that's required for a boarding house is quite onerous. So you do need at least one car space per unit, whereas you used to have, I think it was only one car space per about 3 or 4 units. So that's restricting the number of rooms per boarding house that can be built in an area like that. Question here, what's your view on the inner west housing market, from Frederico? Well, inner west housing market, we think it's got a lot of legs, a lot of potential. We just bought a property for a client in Leichhardt and Dulwich Hill the other day, did extremely well. We think it's got a lot of opportunities for renovation potential, good for growth. Do need to be careful of buying along Parramatta Road. So you want to be further back from the main sort of traffic drag. And again, just look at the areas that have got the right infrastructure, the right sort of community feel, and the right property type. So I guess it's a pretty broad question to answer. Another question, I bought an investment property in Plumpton around 6 years ago. Will it increase in value in 1 to 2 years' time? Well, Terry, we saw from your stats there on Plumpton that it's an area that's had pretty reasonable growth. So I think the long term, if you're holding an investment property as an investor, I would say to you, don't be impatient. Ride out the cycles. Let the property cycle do its work. unless there's something wrong with the property, there's probably no reason to sell it. I would just hold it and let it do its thing over time.
Yeah.
Another question here. Second season of Buying Blind. Yeah, sorry, Craig. No, sorry to disappoint. The producers haven't contacted me to do a second series yet. It did chew up a huge amount of my time, so but not looking to get back into the TV reality world just yet at this point. Although I'll tell you a funny story. Someone rang me from who was a Big Brother the other day and asked if I wanted to join. And I took about 3 milliseconds to say no, sorry, but I'd rather watch grass grow than go on Big Brother. Another question. Hi, Rich and Terry. I'd like to buy land or house and do a duplex, sell off, make 20% profit. Where do you think is the best location to do this strategy right now, Richard? Yeah, look, doing the house and land or duplex strategy is challenging. It depends on your budget, Richard, too. I think probably the best thing to do is ring us and have a chat to my development team, to Daichi and Liam in my team, and work out what your budget is, and we can advise. You know, you'd need probably to be around, if you're looking at, say, the Ryde area, you probably need to be around 1.6 as an entry price. In Newcastle, you can do it a lot cheaper. You can probably buy a site for about 800K. I'd probably say that's a much less riskier option to do something like that, because then you can, if you can't sell it and try to make, you obviously want to make your 20%, you have to sell it to do that. But if you can't, you can just hold it for a period of time until the market improves. So I'd say the Newcastle market would be my pick to do that kind of strategy for a duplex. Another question, what about, I'll just flick through a few more. What about the Hornsby Heights, Mount Colah region? Yeah, look, again, those regions a little bit further north than Hornsby. If you can afford it, I would suggest buying south of Hornsby. But again, if you can't afford it, then the Hornsby Heights, Mount Colah, Asquith region is again more affordable. And that's just because it's that little bit further beyond the main terminal station of Hornsby. Okay, I'm just conscious of time, Terry. We might just do one more question and then wrap it up. Sorry, and I'm sorry we can't answer everything. Thoughts about some of the best suburbs in the North Shore? Well, Remy, that's a very broad question. There's some great suburbs on the North Shore, from, you know, Chatswood, Linfield, Roseville, right up to Warrawee, Wahroonga. Again, I'm not sure how to answer that question, because it all depends on what you're looking to do. If you're a home buyer or investor, some wonderfully high profile, prestigious schools along the North Shore. You know, it's a market that has been always sought after, highly resilient, and I think it will continue to be that way going forward. A lot of people are very aspirational and love to buy in suburbs like Pymble or Wahroonga or Warrawee on the upper North Shore. And then equally on the lower North Shore, you've got all the professionals around, you know, Mossman, Neutral Bay, Camaray, Cremorne. So there's plenty of answers to that question. It's just a very difficult one to answer so broadly. I think we're going to have to leave. Look, thank you so much. There's so many questions about areas. Love to answer them all, but I'm just conscious of everyone's time. We do need to wrap it up. But can I just say thank you, Terry, very much for being on the webinar with me today, sharing your incredible knowledge and insights into the market. Always value it and respect your considered opinion. Thank you to all our viewers who've been on the call today. Appreciate you spending the time. If we can help you or answer further questions, please don't hesitate to get in touch, and we will be sending a recording. So I'm Rich Harvey. Thank you, Terry, for being with us.
You're welcome, Rich. It's always a pleasure.
And look, wish you all the very best, and look forward to connecting with you all again very soon. Bye for now.